Friday, February 24th, market analysis, Stan Ehrlich. Well, I start out with the S&P every day, like today, and the stock market indexes, and I got a few new signals in futures, which we'll get to just after the indexes here. For the S&P 500, yesterday I was very optimistic about the bullish engulfing, although it was not officially an ER buy signal turning the daily price action green. It was very close to it, and it did look like we had a turning point. And I just have to solve a problem here. Okay. So, looks like we had a turning point, but this morning we had some economic news that was not good. The market opened around, depending upon the index, and the S&P a little bit below yesterday's lows, driving itself even further below the neckline, which we have managed to hold yesterday on a big bullish engulfing, which is usually bullish, the day before and the day before. But today, we've dropped down to a new low. Prior to yesterday, I did mention 393 as support, and we bounced off of 393 and small change here, 393.64 this morning so far. But we are managing not to be able to rally enough so far to get back up above the neckline, which would be a bare minimum here. What we really need is a close above yesterday's high in order to fix this thing, and we really need it pretty much immediately. Any close anywhere in the range that we have established so far today would be below the neckline and start to ruin, if not ruin, the head and shoulder bottom. So we go back to support and resistance and other formations to support the likelihood of a long-term bull market for this year. Sorry, I want to hopefully solve a problem with this really quickly. And I don't seem to have a reason for this alarm to go off, so sorry about that. The support is 393, but if that gives way, then we're going to go down to around 90, and we'll talk about that at the time. There's support at lower levels, but really we have, or seem to be, ruining the pattern for the spider. Okay, and here's the 1 minute data on the left. We opened in very oversold condition in the first few minutes, rallied a little bit, closed the gap, dropped to the lows, rallied to slight new highs, but it didn't hold. And here we are, not too far from the low of the day, dropping fairly steadily. Doesn't look good. But then, bottoms don't look good at the bottom. And I'm not saying we're at the bottom. We're just saying that's true on those occasions. I don't like what I see. I've got to say, damn it. Sorry about that. And I'm expecting today's lows probably to hold. But again, 393 is my first support. And then we're going to be going down to the major long-term previous bear trend line across the tops of the market during 2022. And that would be for today, and it does slant downwards a little bit, 391.60-ish. Then you got your 90, 390, and there are other levels below that. Again, we're going to go now to the DIA, which we never broke out of, the head and shoulder bottom. Is the pattern ruined by this big decline, which is now coming very close to those previous lows? Let's put it this way. If this pattern works, the head and shoulder bottom is an unusual combination, which I haven't seen that I can recall. Again, I've been at this a little over half a century. So the only saving grace momentarily is it's oversold, guys. Now, we did have a bullish engulfing in the DIA yesterday, and it was an official ER buy signal. Didn't work. We got stopped out this morning. Small loss, lasted 1 day. We're out. But the oversold condition implies that we're going to turn back up again, reversal or no reversal. And we are coming close to those lows that we saw with a little double bottom back here on December 19th and December 22nd. So 325 and a half-ish isn't too far to go since we're at 326.91. All right, oversold condition, maybe it'll turn back up. It should turn back up again. And again, I'm getting a alarm that is driving me nuts. Okay, next chart. And that would be the QQQs. Now, the QQQs were much stronger, much quicker, and are still way above the neckline. They've already rallied about 50% of the upside objective that the pattern predicted. And that rally high was back on February 2nd. We are at a little bit of support. Doggone it, let me try to remove this again. And I think the way to do that is to just blow that chart away. Good. I don't think the alarm's going to go off again. Good. So the QQQ, whoops, wrong charts. Here we go. Still has a lot of elbow room to go down to its neckline. But with the DIA having some jeopardy and pattern recognition problems, the spider probably ruining the head and shoulder bottom and maybe developing some other formation. All of that provided, I'm not really optimistic that the Qs are going to hold right here. They're not oversold yet. They have elbow room to go down more, and I think they're going to go down some more. And that's pretty much it for the stock market indexes. If you've been bullish like I have, and rightly so, until this morning, now you got to look for new reasons to stay bullish if you can. Maybe we would have, could have turned bearish when we were overbought, which I pointed out at the time, but I didn't think we're going to come down quite this much. Okay, futures contracts. Oh boy, we had yesterday a bullish engulfing in the 10-year notes, and we had a bullish engulfing yesterday in the 30-year long bond. There's your green bullish engulfing. Neither one of these charts worked. Both bullish engulfing ER buy signals have failed. They dropped below yesterday's lows. We're out. But remember, these signals sometimes cluster, and it will be over a few weeks, a couple of weeks, maybe a month. But I'm still expecting, because we are very oversold, for this market to start to turn back up. I have to say that. There's no excuses not to. The long bond was oversold a couple of days ago for several, we still are, sorry, for the last week plus. So it has reasons to turn back up again, referencing RSI. And again, bullish engulfing yesterday didn't work, but maybe we're going to come up with another one very quickly. We'll see. Watch these indexes very, very close, futures contracts very, very closely. Next one is live cattle. We've got a brand new bearish engulfing ER sell signal today in cattle. It did get oversold, and that's what we need. Overbought. Boo-boo. It did get overbought, and we have the bearish engulfing, so we've got a brand new sell signal today. Live cattle probably would come back off to about 160, below 162, very quickly. Next chart. Cotton. A little while back, one of my subscribers asked me to add cotton. For some reason, I hadn't added it. I'm sorry about that. But today, hey, we have a bullish engulfing new buy signal in cotton. I'm looking for a minimum of a test of 89.70, the resistance area for the last 3 months or so, 4, and probably a break of that resistance, which could lead it to a pretty darn good rally. I really wouldn't rule out 110. That'd be pretty substantial. Pretty obviously also take a month or two. This is a potentially very profound buy signal in cotton. Look at how long it's gone sideways without a lot of decision, no trend. And finally, we're getting an indication that maybe it's going to break out to the upside. Let's watch for the breakout. Next chart. We got silver. We had a buy signal a few days ago, and unfortunately, that one didn't work, except for one day. Today, it's official. We dropped off below the STS, the smart trailing stop, which more likely than not would have come up significantly in the last few days, and we probably would have been out, I would say yesterday, maybe the day before, but almost assuredly yesterday. So the system didn't get hurt today. Even though we're down a lot, we would have been out. definitely on the yellow dots, but more likely than not higher. So now what? Continue lower on a trend, but look at the RSI. Come on, don't go short when you're looking at a 15 RSI. The market is telling you it's trying to turn up and it's likely to turn up. And again, I would be looking for a 23, 22, 23, 24 upside objective to resistance and then turning down again. And that would be the best rally I can come up with. Next chart. This is corn, which failed miserably at the major bear trend line, which we were trying to get above, which I was pointing out for a few weeks. And so we have a downside breakout yesterday and a downside follow through today. But again, all of a sudden it's oversold because of the substantial break here. So we're at support. We're oversold. Probably it's going to bounce a little. This is not really any major breakdown. It's fairly minor. You're not making new lows for 2 months or more. 6 weeks. So the oversold condition, I think, is going to stick, and you're going to bounce back a little bit and continue this big sideways trading range. But you got to keep a close eye on this. Don't go short here. Next chart. The E-mini, of course, is not good. The outside up day yesterday produced a bullish engulfing ER buy signal, which failed. We're out just below yesterday's low at worst, at the worst. And it depends upon where you got in, either using ER1 or ER3 as to how much your loss was. Well, it wasn't good, but it wasn't terrible either. Now, we're oversold again. I'm not going short here just because we broke below the neckline. I'm looking for other reasons to maintain my long-term bullish potential. I got to say it that way. I just can't get bearish at the moment. I really have to have some activity on the upside to actually be profoundly bullish, but the oversold condition allows me to have a little bit of a rally, I would expect. Next chart, heating oil. Remember, these two green lines are very important long-term resistance, support. Sorry, goofing up this morning. Support, it's Friday, TGIF. So if those support lines are broken, wow, we have a great, big, huge, new long short signal breakout. And I would expect heating oil to drop off quite a bit over months. We did get the high this last rally on an ER sell signal, just great. We got another great sell signal back here way back in June of last summer. So I'm really optimistic. These two sell signals are going to continue to work for a longer period, and we're going to get, I think, the major downside breakouts, I'm going to guess next week. No significant rally in the interim. We're not near oversold. Next chart. Coffee. Got a little overbought, starting to work its way back down again. And I think I've covered those futures, which I have some significant comments about. Okay, I'll mention the bearish engulfing in sugar today. It's not a sell signal from the standpoint of ER signals, and it's not overbought. That's the reason why. But it is at resistance, and it's failed and failed and failed to hang in there at those prices at the high of the day or approximately the high of the day. Every time it got up there, it went straight back down. And this bearish engulfing is pretty big. I think it's going to drop off quite a bit. Next chart is soybeans. Kind of boring, a little bit bearish. I guess I'll make a comment. And that is it, except I am going to mention forex this time. The euro dollar oversold 2 days in a row. Get ready to buy it. You should have the exact opposite occurring in the dollar index, which I will bring up right now. And it is overbought, so get ready to go short that. The euro to the pound is at support, and nothing really going on there. I'm going to go down the list here. Dollar yen overbought, get ready to go short. Aussie dollar to the US dollar, get ready to be a buyer. It's oversold. US to Canada, overbought, ready to go down. Look how many of these are either overbought or oversold. That is significant. When they group like this and opposites are the same, which is unlikely, something is about to happen soon. US to Swiss, overbought. Euro to pound, at support, nothing going on there. Thank you very much. Keep your eye on the stock market indexes. I really think something crazy may happen quickly, and that could be on the upside, but it hasn't yet. Don't jump the gun. Have a great weekend. Profitable trading to you. Stay in Ehrlich.